Alright, so this is another add-on video. I've been getting a lot of questions. People have been asking me, what is the more high probability setups? Which one? How do you know if this is a good area for supply and demand? And this is what this add-on video is for. So we know that supply and demand is aggressive selling and aggressive buying, and we wait for the market to show its hand. Like in this scenario right here. In this scenario right here, this is aggressive selling come out of this area, and we also have a swing low right here. But this video is only strictly for supply and demand. So the way to see if supply and demand is high probability is if it have a gap attached to it. Okay, so right here, this is a gap in the market. That's the area to fill. Because if you play the replay mode, if you play in the replay mode right here with that drop right there, these two drops, they didn't have a major pullback. And if you're having a hard time seeing it, you could just look at the 15 minute. So this candle right here, this engulfing, this bearish engulfing, it didn't have a pullback. It had that little pullback right here, but not a major one. And then this one had another drop. So if it decides to come back up there, this is high probability because you have supply connected with a gap in the market or an area to fill within that supply. So right here, this will be a good area. Okay, this will be an excellent area. Now these the gaps that's connected to supply and demand is going to be on all time frames. It just depends on if that supply and demand have a gap connected with it. That gives it a high probability that it's going to drop as well. Just like that. So when I see a gap connected with supply and demand, those are going to be the trades where I will probably have a sell limit or a buy limit. I don't really push sell limit or buy limit because if you're wrong, you're immediately going to lose like off the rip. So just be wary of that when you do trade supply and demand and you want to trade with the sell limit or buy limit. I will only use those when it have a gap connected to the supply. So let's just go through some more setups and I'm gonna just show you so you can get a better understanding. But this right here, it had a gap in the market and it came right back to that area connected to this engulfing that was a gap, and they filled that in with supply and they dropped it. Okay, and then they got liquidity. So let's just go to the next setup. Okay, so right here we have a drop. This area dropped. Now if you're having a hard time seeing it, let me do the replay mode. And you see the gap was right here. This right here was the gap. So let's fast forward. They only pulled back just a little bit. But they never filled that in. So it's leaving that area to come back. Now they filled it in a little bit right there, but it never touched that area, like those candles, that last up candle before it dropped, and then it finally gets it. So let me erase this. So you can get a better understanding. So between here and here, that gap still needed to get filled. Let me zoom in so you can get a better understanding of this. So just because it pulled into that drop that created the gap in the market, it only filled it in until up in that little area. That little area right there needed to get filled. So this wouldn't have been a valid sale because it didn't fill in that gap connected to supply. So then it finally came back. With this candle, and then you can be ready to sell. So again, you can have your sell limit for that last up candle before it dropped, or you can just wait for candles to break. It all depends on your preference. And most of the time when you see supply and demand, it's usually going to have liquidity at the bottom. So like right here, this was liquidity right here before it came back up here. So you can hold it until it stops out these traders, or you just go for regular 1-to-1. It's really up to you. Let's keep going because this is this is some really important information as far as spotting important supply and demand. So right here we have aggressive buying over here, but what do we have? This last down candle before it took off also have a gap in the market. That little gap right there, matter of fact, let me not even make a box around the demand. That little gap right there has to get filled. So if it dips back into that, that is going to be a valid buy, but it's valid once it touches that last down candle, if you understand what I'm saying. So this is the last down candle before it took off. So this is where the order started at right here. This is where the order started at. That last down candle, which is the wick, that last down candle before it took off, if it touches back into that, that is going to be valid because it's a gap connected with that demand. Okay, so this whole push created a gap in the market. It's pulling back, filling that in, and as it comes back to that top of that wick of that red candle, then it's going to be ready to take off. And you see what happened. So like I said, when you do have buy limits and sell limits, it is high risk. That is high risk. Like some days I'll use sell limits, some days I'll just wait for a candle to break, and my entry would be literally right here. Stop loss is up under here, and then I'll take it. But these are the high probability supply and demands when they do have an area to fill connected to supply and demand. So I gotta keep saying that so y'all can get that in y'all head. Okay, so let's just go to the next setup. Next setup. Now right here, look at this one. Order started down here, but it didn't have a gap connected to it because that last down candle got filled in with this drop. It got filled in with this drop right here. It pushed out, but then it came back in, so that didn't have a gap. This is a gap right here. This right here, this is a gap, but that's not where the order started at. The order started down here, and they pushed it. They pushed the demand, and then it came back to that area. So this doesn't count as a gap because when it's a gap, there isn't going to be any pullbacks when that demand is being created. Now, on the other hand, look at this one though. Look at this one. This is a drop connected with a gap. The gap is right here because it never had any pullback. This is the gap. So it dropped all the way and then finally came back. And this is where you will be selling because this is supply. It had aggressive selling coming out of this area. No pullback with this bearish engulfing. And then it finally came back around to sell, and this would be your area to sell. Now you see how this box is lined up. That's how I would have my sell limit lined up. It's high risk having sell limits, and I just wanted to put that out there in case y'all are using sell limits or buy limits. That is very dangerous, but you get a higher risk to reward. Okay, so if I did use a sell limit in this situation, I have my my sell limit right there at the wick of that that last up candle before the drop. So that last up candle before the drop, I would have a sell limit at that exact point. My stop loss would be above the high of that candle or above structure. It just depends on the scenario. And we get our regular 1-to-1, and we already know that our runners are either liquidity or areas to fill. And right here, this is the perfect liquidity right there. So let me take that off. That off. And this is just strictly on the 5-minute. You can see this stuff on the 15-minute too. I'm gonna show some 15-minute examples as well. But yeah, regular 1-to-1, and then you can leave your runner for this money right here that's sitting right up under here. That's a W right there. That'll be a perfect trade. But yeah, these are the high probability supply and demand when you have a gap connected with supply or demand. Okay, so let's go to another setup. Like even this one, you're gonna start seeing this stuff. Like that's a major drop, and then it pulls back into that, and you can have a sell limit, or you want to be more careful, and then you have wait for candles to break. But right here, you can see it. This drop never had a pullback. It finally comes back. Entry would be right there. Stop loss would be up here. Liquidity is right here. That would be your take profit. So let me just do that right there in case you do want to do a sell limit. You have like maybe above that candle or above this structure if you want to be really careful. And then your regular 1-on-1, and then you leave your runner to that low. Or if you got a higher time frame, now look, we're looking left. If we're looking over here, we got areas to fill on the higher time frame, so you can try to mimic that if you want to. I think this is London session, but I just wanted to just throw that out there. Okay, now this is a low probability setup. Why is this a low probability setup? Really pay attention to this. This is a I mean, it's not low probability because supply and demand is really a good strategy, but if we're looking for a more high probability, this doesn't match with high probability. So this is the last down candle before it takes off and it comes back. Now, why is this not a gap in the market? It's because of this candle right here. That candle right there, it pushed out. Now, if this candle right here just kept going up with no pullback, that would be considered a gap connected with demand. But since this candle wicked back into that zone right here, that is not a high probability supply and demand. It still might work, but it's not high probability. Okay, just want to throw it out there. Just because of that, this one candle that pulled back into the zone, it filled that in. It filled that in, so that don't count. Let me just keep going. I think I'm gonna go to a 15-minute setup. I know I have some more marked up. Okay, right here. This is perfect. So this is supply and demand, but we have a gap in between that last down candle. So if you can see it, that's the last bearish candle before they finally took orders. So they finally start buying. Investors finally start buying up in this area. So that was the last down candle, which was this red candle. And as it took off and it left that little gap. That candle, this candle right here, pulled back just a little bit, but it didn't fill that in. So as it came back, you could have had a buy limit right here. You could have had a buy limit right there. No, I'm sorry. Let me not get y'all wrong. You could have a buy limit at that last down candle, which is this one. If that line, if you can see that lines up perfectly with that that wick right there. It lines up perfectly. Let me line it up even more perfect right there. So let me take this off. So that lined up perfectly. So you could have a buy limit right there at that last down candle before it started doing aggressive buying. And then your stop loss will be underneath structure. So if it do blast through, you lost. And we'll go for our regular 1-on-1, and then we'll look for liquidity. Where can we go to take this? Now this could go at that high. It can go over here. This can be a target. This is a gap right here. That can be a target. So it just depends, you know. It just depends. But I'm gonna go to a 15-minute setup. Matter of fact, let's go to Euro USD on a 15-minute setup. Oh crap. Let's go to a 15-minute setup. Let's see if we can find one. Right here, boom. Okay, so some of y'all get confused as to how this is supply and demand right in the middle of price. This is supply and demand because obviously these two aggressive candles is pushing out of that that little green candle. Like we had this aggressive selling coming out, and you see how if you would have had a sell limit right there at that last up candle connected with a gap in the market or area to fill, it came immediately back into that area. You could have sold, and then you look left to see if it's some structure. We got a low right here. I'm pretty sure they tagged these people right there, and they did. So you could have sold at this very area, get your 1-on-1, and then the runner could have went and go get these people, or even right here if you don't feel comfortable holding for that long, because this is Euro USD. But you see, this is even on a 15-minute. You have a drop with a gap, and it fills that in. This is where you want to sell. Or if you want to do like the safer route, which I do recommend people to do the safer route. Have your stop loss right here, or if you want to do it above the demand, I mean the supply, then go ahead and then get your regular 1-on-1 and then leave the runner. Okay, But yeah, that is definitely high probability right there. What is this? Right here, here go another one. Like, you're gonna start seeing this stuff. So this is the last down candle before they start buying really hard. So line that up. Remember, these are the high probability demands. If you line that up, that is the demand. But if you line it up with the gap connected to it, that's the gap right there. This candle pushed out really hard, pulled back from a little bit of that candle, but never closed that in. It never closed that in. So if it comes back, you're gonna get ready to buy. Okay. Now I'm just gonna use the safer entries. So these are the safer entries right here. That's like the more entries that's not really risky besides using buy limits. So this would be a 1-to-1, and then it probably would have won against you, but you still won though. You should have moved your stop loss to break even. But this is demand as well, and you see that as soon as it came back to that demand, then you will buy up in this area, right on that area. Okay, take this off because this don't really matter. I'm gonna go through one more 15-minute setup, and yeah, we're gonna be done with this. I could use that one. Trying to find something that got a gap connected with it. Okay, perfect. Okay, so right here we have a gap from right here. Now if you can't see it, let me do the replay mode so they can make sense to you. So in this area, this is aggressive buying, right? This is aggressive buying. Pushes up even more, and now it's filling it in. It haven't filled it all the way in, but it's still filling it in. Then it fills it in right there. That last down candle before takeoff, then it fills it in. Then it takes off. Now, some of y'all might be confused because ain't this supply, right? So this is another thing. This is how you use everything that you know. So if this is a supply, aggressive selling coming out of this area, and we have demand right there with a gap connected to demand, you're gonna want to get out when it touches that demand. This is also like trading ranges. Okay, so right here, this is also like trading ranges. So this is high risk for sure, definitely high risk. But if you see supply and demand in a range, and in this scenario, this is a demand connected with a gap with it, you can take that sell and that buy. Okay, now when it comes to supply and demand that don't have a gap connected to it, I would recommend just have the more safer entry. Don't do the buy limit or sell limit. Don't do that. I only will recommend a buy limit or sell limit when it have a gap connected with it, okay, or it have an area to fill connected with supply and demand. That's the only time you should be using buy limits or sell limits. Other than that, let's do the safer entry, the regular breaking candle low right there, and then get that regular 1-to-1, and then as soon as it touches the demand, get out and then try to get in for that buy to trade the range. Okay, so yeah, that's all I wanted to share in this high probability supply and demand, because some of y'all are having a hard time. Here go another one right here. Aggressive selling, came back into that area, sell limit, boom, triggered in, stop loss above here, and you will take that sell. But yeah, I just wanted to just share the high probability supply and demands. Some of y'all are killing it with just the videos that I have, but I feel like I needed to add more to it so you can get a better understanding of when you are seeing high probability setups. I would recommend using the 5-minute or the 15-minute when it comes to the sell limit or buy limit with the gap. Don't really use that on the 1 hour, because your stop loss is going to be extremely big, especially for indices. That's very dangerous. So 5-minute or 15-minute high probability supply and demands. Okay, you can use sell limit or buy limits, but it's at your own risk. If I see that it does have a gap with it, I might actually have a sell limit or a buy limit. It just depends on the scenario. But that's all I have on this video. I hope you got some value from it. Go back test it. Go look for supply and demand and with a gap connected with it, or an area to fill that's connected with it. And you're going to start seeing that those are going to be the real winners. Like those, that's like the real sauce. I'm not going to lie. Like when they have a gap connected with supply and demand. That's all I got. Yeah, that's y'all homework. Go back test supply and demand with a gap. Here go another one. We got aggressive selling right there, and that little smidge right there. Can you see it? Can you see it? That little smidge right there. That's a gap. And it pulls back into it. You sell. Stop loss is up here. Take profit is down here. Look left for liquidity. Look left for more for gaps on a higher time frame. Okay. Peace.